Hey everybody, Frank Finance here. Hope you're having a wonderful day. Today we're going to be doing a stock analysis on Energy Transfer, ticker symbol ET. For today's stock analysis on Energy Transfer, I'm going to give my price target for Energy Transfer, look at 2021 Q1 results that are announced today. We're going to look at a brief business description of Energy Transfer for those who are unfamiliar with the business, look at the stock price history, look at price performance of the stock versus its industry peers. We're going to look at the fundamentals of Energy Transfer. We're going to look at some dividend information and news. Next, we're going to look at the acquisition with Enable Midstream Partners. And finally, I'll give my thoughts and strategy with Energy Transfer. If you're new to my channel, please consider subscribing. It helps me out a ton. I do videos on stock analysis, investing, and general personal finance topics. If you like anything in this video, please hit that thumbs up button. It helps me out a ton. Now, back to the content. My price target for Energy Transfer in the next 12 months is anywhere from $12 to $14 a share. That indicates a 32 to 54% upside from the current share price, which is trading at $9.10. Now, I do indicate that is a fairly large upside. So again, please take it with a grain of salt. I'm going to use the rest of this video to go through why I believe Energy Transfer can achieve that price target again in the next 12 months. When we look at 2021 Q1 earnings, we can see that Energy Transfer blew away analyst expectations. They beat the earnings per share by 92 cents. Analysts estimated 29 cents per share. They reported $1.21. That's huge beat by 200%. On the revenue side, they reported $16.99 billion, almost $17 billion. Compared to the analyst of a little less than $12 billion. So they beat estimates on the revenue side by about $5.28 billion. Huge win there. Now, if we look at two key things that I wanted to pull out of this, that I pulled out of the earnings, they expected a bump of $2 million related to the Winter Storm Uri. They now expect that a total approximate impact to be around $2.4 billion. So a huge impact there. That's a really nice bump, 10x on the impact of that storm for their side. So it's a good thing for them. And then they also adjusted their full year EBITDA from $12.9 billion to $13.3 billion. Now, again, really great to see that increase there on the EBITDA guidance. If you just look at their EBITDA guidance compared to, and we'll look at the fundamentals later, but compared to their 2019 levels, it's almost up 30% compared to 2019. So I know their 2020 was really bad, but again, that is really great to see that they're increasing their guidance even further on top of that guidance of 12.9, which is already pretty good. So already really good compared to their 2019 numbers, which is where I kind of set the baseline. So let's go on to give a brief business description, and then we'll talk about the stock. All right, so Energy Transfer is a midstream oil and gas company. They have a ton of natural gas capacity as well as crude oil and refined products. I have the transfer capacity listed up here by natural gas, crude, refined, and also I have the storage as well. So you can see that they have quite a bit of capacity. They're a fairly large company inside the midstream business. I'm going to throw up a little infographic here so you can see what midstream is if you're unfamiliar with oil and gas in general. It's kind of in the process and storage, whereas upstream is the actual extraction of the energy, and then the downstream is the processing, and then the distribution, like gas stations and refineries. So the midstream is kind of just, again, processing and storing. So again, Energy Transfer, that's their core of their business. Is transferring oil and gas from place to place and sometimes storing it for various reasons. All right, so looking at the price history over the last 5 years, you can see Energy Transfer is currently trading at $9.02. You can see at the start of the pandemic or pre-pandemic on February 14th of 2020, they're trading at about $12.72 a share, and they were averaging over the last 4 years prior to that, a little bit over that in terms of stock price. So anywhere from, probably averaging about $15 a share in that 4 years leading up to the pandemic. During the pandemic, at their all-time low, they traded at $4.77. They traded briefly in June of this past year, so almost a year ago now, 11 months. They traded at $9.16, and a lot of these oil and gas companies, upstream, downstream, and midstream, saw that big spike in June, and then a decrease all the way up until I think the September-October timeframe, and then they've been going up slightly ever since with the full recovery. So, and really with oil prices continuing to go up and all energy prices continue to go up. So right now they're trading at $9.02, and again, this looks like a good trajectory to get back into that $12 range that they were pre-pandemic. Thank you so much for watching my video thus far. Please consider liking the video. It helps me out a ton with the algorithm. Now back to the content. So moving on to the price performance versus their peers within the midstream industry, you can see that we have Enterprise Product Partners with -8% and Kinder Morgan at -15%. Energy Transfer over that year since February 1st of 2020 is down nearly 30%, and Plains All American is down -43.34% for the year. The reason why I like having these graphs is you can see how they're performing within their industry. You know, the S&P 500 over this time frame is up quite tremendously. And so I just want to, put it in context of similar stocks. So you're not comparing this just to the S&P. What I gather from this graph is that relative to its industry, there are some people that, there's definitely companies that are performing better than it relatively, and there's companies that are performing worse than it. So I don't think this is a negative or a positive thing in and of itself. It's a good thing to know where they fit within their industry, and that's why I provide this as a value added. All right, so let's move into some of the financials. If we look at total revenue over the last several years, you can see they've had ups and down years. December of 2014, again, the price of oil was extremely high in 2014, so that could probably contribute there. I think gas was also expensive. You can see there was a big price dip between 2015 through 2016, and honestly, oil prices remained fairly low throughout that time frame, but they're able to increase their revenues back to those 2014 levels. Now, if we look at 2020, clearly oil and gas did not do very well across the board. However, one bright spot is that when you look into their gross profit, you can see that they relatively compared to their total revenue, which was down $15 billion year over year, you can see that they actually increased their gross margin on their gross profit about 6%, and then on the gross profit, they were only down about a little less than $1 billion on gross profit, with $15 billion less. Now that's because they reduced their CapEx. So again, really great to see that there. On the EBITDA side, again, really strong margins, stronger margins they have historically, and it looks like their margins have been improving since 2014. So that's really good to see. If you look at their net income, you can see that has been increasing year over year pretty steadily. So that's also good to see. However, again, that came in negative in 2020. But I do expect that to turn positive again for 2021. I don't expect it to be back at the 2019 numbers as quickly, but I do expect it to be at least positive for the FY 2021. If we look at consensus revenue estimates for 2021 and 2022, we can see the revenue estimate is $51 billion and $53 billion for 2022. Again, when we compare that back to 2019, that was at $54 billion. So again, a slight decrease there on both sides, but I do expect that margin to stay up. They're still going to probably keep their CapEx low. So I do believe that their margin, actually their gross profit and EBITDA, could actually exceed what it was in 2019, although their net income might actually be lower. So again, that's a positive there. I think this is a good, definitely a good year-over-year growth. But it's kind of hard to, it's easy to beat it when you had such a bad year. But even when you refer it back to the 2019 numbers with those increases in margins, that's going to be great to see. So next up is dividend news. Again, with most of these oil and gas companies, they have a pretty nice, healthy dividend yield. Energy Transfer was around 12-14% before they cut. in October by 50%. Now, a large degree of the reason why they did this was so they could help pay off their, help pay down some of their debt, which is quite large. But another reason why is their payout ratio was quite high, and we'll look at there here in a second. So they reduced their dividend from about 30 cents a share down to 15 cents a share back in October. Their current dividend yield at about $9.10 is about 6.675% a year. So again, that's pretty healthy. I would say that's a pretty nice dividend yield. Now, if we look at the dividend over the last 4 quarters, we can see again in March of 2020, it was 30 cents. June of 2020, 30 cents. They dropped it in October. So in September, the dividend yield was, dividend was at 15 cents. And you can see in the latest earnings in December of 2020, their payout ratio was around 62%, which is actually really good payout ratio, I would say. It's not super high, it's not super low. It's fairly healthy for kind of maximizing the dividend versus paying too much and getting kind of risky with your cash flow. On the and you can even see the earnings per share for the first time in the last year. They actually were making more per share than they were distributing via the dividend. So that's good, healthy to see, and I expect that to continue to move forward in the future as the recovery continues. So if you're a dividend investor, you're looking for some income, this might be a good stock for you to consider that might have some good capital appreciation as well as a nice healthy dividend yield. Next up, let's talk about the merger between Energy Transfer and Enable Midstream Partners. This is going to be a $7 billion all-equity deal, so there's not going to be any additional debt from this transaction. Now, I think this is going to be a really good deal for Energy Transfer. They're purchasing basically at the old price of which they were valued prior to the pandemic. So I think that's a fairly good deal. Especially, I think some of these companies are worth more than they were pre-pandemic, so that's good. On the financial side for Enable, you can see that in the last 3 years, their revenue's been going down, but their margins have been increasing. So again, between December of 2019 and December of 2020, you can see that they just had a decrease in gross profit by about, $100 million, maybe $250 million. EBITDA just down about $160 million, and net income is down about 300 million. So it's good that again last year they didn't even bring in a net income that was negative. So that's actually really cool that they were able to pull that off within a really stressful year, a really financially challenging time for all oil and gas companies, midstream, upstream, downstream, all the like. But they did fairly well throughout the pandemic. And again, I think they're just going to have more value coming out of this. And I'm really excited. I think this is going to be a very good deal for Energy Transfer. However, please just remember that their total revenues of, again, 2019 revenues of almost $3 billion is fairly small in comparison to the 2019 numbers of Energy Transfer at $54 billion. So it's a very small acquisition. I think maybe 5% of their total value right now. So I don't think it's going to add a ton of value immediately, but I think it's going to give them some extra long-term growth potential as well as some diversification as well. So I think it's overall a good merger for Energy Transfer. All right, so Energy Transfer blew away earnings for their Q1 of 2021. That huge beat in revenue, huge increase of earnings per share. Shareholders have to love this. The stock price has to react fondly to this. I think that $12 to $14 in the next 12 months is definitely doable, especially on the back end of that. You had really strong EBITDA guidance for the end of the year. Again, that's about 30% higher than what it was in 2019. So that's really great. The stock price history, I think, further cements where that stock should be headed up into that $12 to $14 range. Could be even higher based upon the earnings that I saw today. I'll have to do a little bit more on that later. But the midstream industry is down overall last year. And again, I think that whole industry is going to keep moving up into the positive area. And then on the fundamentals, the 2020 numbers were terrible, but based off of what I saw in the earnings and the progress that they made in the later quarters of 2020, I think they're in the right direction to get themselves back on track to a good profitability. And again, with their increases in margin, I think that's really, really good to see moving forward in the future. So I just want to, again, I think Energy Transfer stock is going to move up, especially based off of what we saw in earnings. We see that I think that price target at $12 to $14 is definitely achievable in the next 12 months. Again, that's a 32 to 54% upside. So, happy investing there. And let me know what you think in the comments below about Energy Transfer. Please consider subscribing. I do videos on stock analysis, investing, as well as personal finance. If you like this type of content, please give it a thumbs up. It helps me out so much with the algorithm. Thank you so much for watching today's video. My name is Frank James, Frank Finance, out.